When I got my settlement package, I was given a big chunk of money and I didn't know what to do with it. But you're not going to be in that situation because we have Hashim Chaudhry of B&G Accounting and Business Solutions, who's going to tell us exactly what we need to do when you get that big chunk of settlement money. Hashim, thank you so much for talking to me today about, this big issue for a lot of people who've lost their jobs and have a settlement package.
Yes, definitely. A lot of people have lost their jobs. It's kind of like a normal thing. People do retire, but due to COVID, you're seeing a lot more people in this boat over here. So, first of all, thank you for having me over here today. So typically speaking, when people get a package, there's generally three options. Some have four, some have five. But the first option in general is, hey, leave the money with us, and when you retire, you're going to get this much money. The other option is, well, you can take some, leave, and take it in a different time frame, and you're going to get this. And the third option is normally which I encourage most of my clients to exercise for many reasons. And taxes, yes, that might in the short run look like the most costly one, because the third option is generally, hey, there's a locked-in amount that's going to transfer into your RSP. Mind you, it does not impact your RSP limit in any way, because there's a time frame on it that you cannot take it out until this particular age. So it's kind of like money moving from one to the other, and it's kind of put away. It's a straight transfer. The other part of it is a lump sum payment. Now, your employer will ask you in there, hey, do you want to hold taxes on that particular amount? Some will say, they will even go as, some employers will even go as far as saying, hey, do you want to hold 20%, 30%, 40%, or 50%? Now, this is where I remember my accounting prof back in the day. He used to always make fun of me in the class. They will ask me a question and say, randomly, and I will say, the answer is, it depends. And he will say, okay, Mr. Chaudhry, what does it depend on? Well, it really comes down to a few things. Do you have a plan for that money? A lot of time people would simply exercise that option and not hold any taxes and then go out and spend the money. And at the end of the day, they are stuck with a big tax bill. Let's say you have worked for a company for a very long time, and let's say you're getting a $500,000 payout. And
let's say that's a good thing to say. Yeah.
Right. And which is not really a bad thing. There's a lot you can do with that money. Mm-hmm. I'll share a very recent example. One of my clients came to me, and she was in a similar situation. She had about $800,000, about 3 of that was going to go straight transferred into a locked-in pension, and the remaining 500 something was going to come to her as a lump sum. I had advised her, based on what your plans are, hold 30%, tell them to hold 30%, so you're not really stuck with a very large amount. The second thing I asked them to do is to maximize your RSPs. Now, me personally, I'm not a great fan of RSPs because if you're not self-directed in there, a lot of the money that your potential growth that possibly could happen in there is taken away by the banks. And mind you, you will pay taxes on it when you withdraw that income. So going into RSPs, you have to really look at it. Okay, what's your exit plan? Never go into RSP without an exit plan, because it's not the best way to invest. Now, that's a completely different discussion. And, one of the things I will be offering today is, 1 hour free discovery session. And we can take a look at that if that is something right for you or not. But generally speaking, go with the option 3. Maximize your RSPs in there. And then the other thing I want to add in here, and me and Craig, we were talking about this earlier, that in life, one should always have a plan B. And many of you who have been let go and getting those packages have been now put in a very tough financial situation. One of the things my mentors have always taught me is, Hashim, always have a plan B. And let's say your job is gone today, and an average Canadian loses their job at the age of 45. Then that's not Hashim saying, that's Statistics Canada. So are you ready for that? So have your plan B, and the best plan B anybody could have is having a business for yourself. And this could be one of the best times for you to start your business. Now, why do I say that? Well, you got a lump sum. It's adding to your income. Any business, when you start, there's usually a lot of overhead expenses and upfront expenses that you have to do. Like you have to do leasehold improvement. You might have to get a website. You might have to get the initial inventory and what have you. There's a lot of expenses these days to start any business. So this could be a perfect time for you to start a business, because in the initial phase, you have lots of expenses. Those expenses will literally create losses on your taxes. Those losses will be countering all the income influx that you have because of the severance package. So combined with an RSP and with the small business, you can really take care of a big chunk of income that's coming to you. And hey, it's a perfect opportunity that, it's never too late to have your plan B going.
Yeah. And we're heading into, or we're in the middle of a gig economy anyway. A lot of what you're going to be getting are contracts right off the bat. So it makes sense to put that into, you're not going to get employee salaries anyway. When I lost my job, I got the lump sum payment. They withheld taxes. And I put money I maxed out what I could put into an RSP, but I also knew I wanted to make money that year. I was going out. I had my idea for my business at that point, and I incorporated and made enough money that year to justify it. But what I really, and flat out, incorporating is kind of a pain. But I got to say, the tax difference that I have seen from being a business as opposed to being an employee is significant. It's a big deal. A lot more money is stuck to my jeans. I have
on average 30% more money. Let's put a number on it as well. If done right, people could be putting more than 30% of their hard-earned money, leaving them in their pockets.
Well, let me put it this way. The job that I had, I ended up producing a series for a company, and I produced it through the end of 2017 and through 2018 into 2019. And let's just take 2019, because that was the year I was doing that. I spent 2 months of the year not on that job. The weekly take home that I had from the contract work was analogous to what I was getting in the job that I had, full-time employee job. So I was off about 2.5 months during 2019 as opposed to 2017. So I wasn't working 2.5 months, not a salary. I think I kept the same amount of money.
Yeah. At the end of the day, but, I always have to say one thing over here. And I know me and Craig, we were talking about this. You did incorporate. Your situation was a little bit different because from get-go, you did get.
I got lucky because I incorporated out of ignorance.
Out there, it's probably best you start as a self-employed person, get your HST number, get all that money as losses. And the moment you land your big contract, you don't need to incorporate on January 1st. You can go through a phase where you have all these expenses as a self-employed person, show losses on your personal taxes to counter the income that you just have received. And the moment you land your big contract and you're about to get paid, invoice, get incorporated, it takes less than 24 hours to get your corporation. And we can help you with that. And literally just flip an invoice in that name rather than your personal. So you're benefiting. You really need to maximize all those expenses while you're still at the sole prop stage, because they're just going to help you. Look at it in a way, for many people, a 53.5% discount. Literally, You want to build a website, you want to take courses, you want to do things, get it at 53.5, because for many people, when you get that big lump sum package, you're landing in the highest tax bracket, which is 53.5%, which is quite frankly very scary. Yep. So spend the money as a sole prop. When the money starts flowing in and you're going to go in positive, for as long as you're a negative, stay sole prop, self-employed, because you need those minus numbers on your personal tax return. You're getting close, or you're about to go over, get incorporated, as Craig mentioned over there. But again, all of this stuff, you need to talk to your accountant and see if this is the right thing for you. We're talking general terms over here, things, general concepts. It doesn't necessarily mean that you should be taking this information word to word and just going and doing what you think this is written in stone. No. Numbers never lie, and I tell that to people all the time. Go talk to your accountant. Let them work the numbers for you and see if this is the right move for you. Should I incorporate right now? There's 101 ways to do things. And some are costly, some are mistakes, some are the best thing you can ever do. So just make your decisions wisely over here.
So get some advice. You recommend starting a business, and one of the reasons for that, even if you don't know what you want to do yet, if you're not ready to build your website and brand yourself, if you're going to get more education to find out what you want, if you're going to have some consultations with people, they're going to charge you, all of those costs come off of your income before you're taxed as a business. And to get the advice on those details, talk to an accountant. If you have a good one, great. If you don't have a good accountant, I think I know one, and he's willing to give you a free consultation to come in and talk to him about what you can do. And I haven't known Hashim long, but this is a good guy. This is a good guy. This is somebody you can talk to.
Let me break a few myths over here, Craig. A lot of times people have this misconception, oh, well, I have to register a business, I have to do this, I have to do that. Well, let's cut the crap over here. The bottom line is, you do not need to register a business in Canada in order to do business. So you can operate as your own name, okay? You have to register for HST when you hit $30,000 in 12 rolling months, okay? That's a statutory requirement, but you should be registering your business with HST from day one, because you do have an option to register voluntarily, and just see how much HST you would pay through the time over here. And I say, do not leave money on the table over here. Incorporation, well, it all depends. Are you hitting the numbers? Is that, like, corporation is not cheap to get or to maintain, right? Make sure you time it right over here. And another thing, what is a business, an active business? You must have $1 of income. You must have intention to make money, and you must have a reasonable expectation of profit. Okay, so if you have a business plan and you have something that you want to do, speak to your accountant and make sure everything is planned correctly. This way, all those expenses that you're about to do, you're not overlooking anything, and no money is left on table.
Yes. Well, I did some of that, and I wish I'd known more. So we're going to wrap this up. Hashim, thank you so much. Really appreciate this. All your contact information you can find below this video on the website. He's giving you a free consultation. Listen, you got this money, you've got some worries. People want to help you. There are things you can do with it. You have a lot of options, and you have some time to figure it out. Hashim, thank you very, very much for this.
Thank you for having me, Frank.
I hope people take you up on your offer. This is a good guy.
Thank you.